Hey guys, I'm Anisha Gupta and I'm looking at the iron ore prices right now where we have seen quite a sell-off in this week happening. Overnight market saw a 10% decline and for this week we are down by 13.5% for the iron ore prices from nearly a 5-month highs in the previous week to the kind of sell-off that we have seen in iron ore prices is not really because of fundamentals. It is because the transactions or the investors are jumping out of the market on fears that China is clamping down on trades here. Well, Beijing has warned against any misinformation on trade, fake news, fake price movements in the trade there, and that has led to a lot of investors going for profit taking here. China has been working to limit the speculation moves in the market and is also working towards stabilizing the space where we have seen a lot of volatility in last few sessions here. Companies in China also have been asked to provide details on the spot and future dealings that they have done and give details of the inventories that they hold or have booked as well. China State Planner and China regulator also have summoned the domestic and the foreign iron ore traders for a meeting on Feb 17th. Apart from that, we also understand that DALIAN exchange has hiked transaction fees for futures contracts for the month of Feb, March, April and until the May deliveries as well. But the important point to look forward is that China also has infused liquidity into the markets and also has started on its construction after the Lunar New Year holidays. So that means as and when the activity picks up, you will see demand for iron ore and steel coming back into the market. So it is going to be volatile going forward. But one thing that you will definitely have to keep an eye on is the Feb 17th meeting and what we hear out of that. But when you look at the prices in this year itself, on Jan 1st, we started this year for iron ore prices at $116 per ton. The Feb high has been a 5-month highs of $152 per ton. Since the profit taking, today we are trading between $130 to $132 per ton. So as you can see, the last couple of months itself have seen a lot of volatility. But it is nothing when compared to 2021, when we saw an all-time high in case of iron ore prices to the tune of $229 a ton on the higher side, and the low for the last year was $85 a ton. So that clearly is a huge range here. And then when you look at the global iron ore market, in 2020, it was at 2.1 billion tons. 2021 was a jump up to 2.4 billion tons. And the markets are anticipating that by 2026, it's going to be a big 2.7 billion tons there. So with the kind of market that we're looking at in sense of property demand, construction demand, steel demand, and the fact that China is still easing on its monetary policy are some of the factors that would be supportive. But one thing that China definitely wants to do in the market is not look at too much of volatility, ensure that there is no fake news or misinformation, and the other thing most importantly, that there is no high volatility or wrong speculative movement in prices there.